Hi, everyone. Welcome back to the Thinking Crypto channel. I have Alexander Blum with me, who's the founder and managing partner at 2Prime, which is a digital asset investment firm. Alex, it's great to be speaking with you today.
Yeah, likewise. Thanks for having me on.
So, Alex, I'm very curious and I want to pick your brain on a lot of things because you're on the forefront of getting investments from institutions and wealthy individuals and so forth. But before we get into that, can you tell us a bit about your background? Where are you from? Where did you grow up?
Yeah, it's been kind of a winding path. I mostly grew up in Southern California, and then for part of high school lived in Arizona. I went to undergrad in Boston. I was in the Peace Corps in Panama for a number of years, which is when I first kind of started thinking about and finding uses for Bitcoin or non-centralized monies to do remittances to the poor. And then most recently, I lived on a hippie commune in Vermont for a couple months, like 6 months, and most recently was in New York City for about 2.5 years, and then moved out here to Denver, Colorado, where I have a home and will be staying for a while. About 2.5 years ago. So. Yeah, it's been kind of all over the place. And I think you asked me, how did I get into crypto, or was that part of the question?
Yeah, how did you first discover cryptocurrencies, and how did that lead to creating 2Prime?
So after I was in the Peace Corps, where I lived, there was no phone service and no internet, no electricity, but a lot of people still had phones. I was in the Peace Corps from 2010 to 2012. And during that time, while I was away, smartphones really became ubiquitous, but I didn't kind of see that transition. I just came back and everybody had a smartphone all of a sudden. And I just really got to thinking, wow, if you could get phone service out to rural places, there's so many things you could do, including sending remittances, amongst other things. But these people didn't have bank accounts. And so I became very interested in alternative ways to send international remittances. And at the time, Ripple was a solution, and you could send Bitcoin over Ripple. And so, we were emailing with Ripple and finding ways to both set up low-cost telecom networks and to figure out ways to send money across that network. And then once you kind of go down that rabbit hole, just the intersection of, politics and culture, society, economics, all of it, it's kind of hard to look away at that point. And so then, as the industry kind of matured, I had some experiences working for a venture capital fund that was looking at crypto mining very early on, and then did some stuff for the Gates Foundation and the World Economic Forum around humanitarian applications, as well as some censorship and privacy issues related to blockchain technologies in general. Then when I was living in New York, started a broker-dealer that was raising investment via security tokens. So we were providing both the software side of it and then also doing the fundraising as a regulated broker-dealer in New York. And then some of us that were investors in that created a hedge fund that just kind of focused on the asset management or financial side of it, which I can tell you a bit more about, but that's sort of how I ended up here.
Yeah, and I saw in your LinkedIn profile, you're at the Bill and Melinda Gates Foundation, and the work, it sounds like you did some great work there. And I'm curious what your thoughts are on the Mojo Loop, and I think Ripple's involved in that. It's kind of come full circle maybe for you, given you were connected to Ripple in the early days.
So Mojo Loop is was a way to kind of use digital monies, right, to be interconnected or interoperable. I think I don't know that much about it, to be honest, but I think that generally, I guess my experience in the Peace Corps was that there's very motivated and intelligent people that just didn't have access to capital or opportunity, and that were perfectly competent and capable. And I think, to me, that became the biggest barrier. Wasn't that they, couldn't do things or they didn't have ideas. It was that they didn't have the funding to do it, and so it was a major, just impossible hurdle to get over. And so I think technologies in general that open up access to capital and the easy flow of it are generally good. I think, I don't know, to be honest, a lot about Mojo Loop, other than I know that interoperability amongst different, digital or phone-based currencies is an issue, just as it is for some blockchains to be interoperable. And I think improving that system is important. But yeah, I couldn't pretend that I know much about it.
Sure. So I have to ask, what do you hold in your personal crypto portfolio?
Yeah, so honestly, I mean, I have a pretty large exposure to our fund, which is, the main fund is just Bitcoin and ETH, and uses options to hedge downside risk effectively. Or another way to look at it is we make money when things go down while everyone else is losing money. So that's one fund we have. I can get more into, and then the other fund is a yield fund. So is buying a basket of different currencies, but we're just trading spot against future, and also doing some DeFi staking to get around a 13 to 15% annualized yield. Other than that, I invest in some venture funds that they invest in cryptocurrencies directly, or private sales of tokens, stuff like that, especially in the creator or NFT ecosystem. But I have pretty large exposure through our funds, and so the other stuff I own is non-crypto.
Got it. So you mentioned for Two Prime, the respective funds, the primary assets are Bitcoin and Ethereum. Are there plans to add more exposure to other crypto assets?
Yeah, so the first fund, which is buying and holding Bitcoin and Ether, and then using options to manage downside risk protection, really evolved to manage my own portfolio and my partner, Mark Fleury's portfolio. Mark is the founder of a large software company called JBoss that was acquired by Red Hat for several $100 million in 2006. And so both of us were interested in not losing the money we had. I've been through a number of kind of boom and bust cycles in crypto, and it doesn't feel good when it goes down 80 or 90%, and suddenly you're not buying that second house. And so that is the main purpose of that first fund, and it's done quite well. Because it uses options, it's limited by where is there an actual options market, and so right now there's only significant enough volume for the size of fund we are in Bitcoin and Ether. I think that you will see other top tier digital assets start to introduce a robust options market in the months and years to come. Probably see things on the CME or Deribit as one of the primary venues for options trading. But so if that arose, and then that additional currency, cryptocurrency, had some diversification and was doing things Bitcoin and Ether weren't doing, then we'd definitely consider it. But right now, that it's more of a structural limitation than it is anything on our end.
Sure. Can you tell us about the assets under management? What's the number right now as far as the dollar, and what type of demand you're seeing from institutional investors?
Yeah, so we were trading our own money using this option strategy since the beginning of 2020, and then which is really when any options were available. We opened it up as an outside investment vehicle in February. So we had about 40 million of our own money, and then we opened it up to outside investors February 1st, and now we're somewhere in the first one around $100 million. I haven't checked today, but around that level, which, considering things have been down quite a bit the last 2 months, isn't too bad. And then we just launched at the beginning of this last month this yield fund that we, the founder, just put a couple $1 million in to get it started, and have started talking to people about, but is relatively small at this time, though there's a huge interest and demand for yield. In terms of institutions and money managers in general, I think obviously when things are going up 40% a month, it's much easier to raise money because everyone has FOMO and wants to get into things. But our fund really does well, or sort of like like raison d'être is during times when things are down, because everyone's a genius when everything's going up 40%, but to have that downside risk protection suddenly makes a lot of sense when things drop 25, 30% in a month. And so, we've seen, there's institutions or money managers have a very different kind of mindset than the individual retail buyer, in the sense that, the main priority they have is, I don't want to lose my job. And the main barrier to investing in crypto for themselves or their investors is they don't want to look foolish. So like, even if Bitcoin goes up 50%, like nobody nobody gets mad at you, as mad at you if you didn't buy Bitcoin, but if you own Bitcoin, it goes down 80% and someone's portfolio is screwed, it looks completely irresponsible and ridiculous. And so offering a fund to people like that, that's professionally managed, that's led by reputable people that have their own skin in the game, and also has protection against those big downward moves, is a huge comfort to institutions, and something they can go to their investors or their investor board and say, hey, like this is a thing I can stand behind. Like I'm not going to lose and destroy my career because I bought Bitcoin or something like that. And so the same, we've seen a lot of people that are, grayscale investors that all of a sudden, like that grayscale trade isn't looking so good. The grayscale shares are trading below NAV. And so if there's something that could be risk managed, doesn't have that risk of trading below NAV, or isn't subject to secondary market dynamics, it's also really attractive to people. And we have the same lockup period and similar fees to them. So yeah, on the yield side, there's, on the yield fund, it's rather nascent, but obviously things you can find in either trading spot against future or doing DeFi staking of stable coins is so much higher yield than even high risk corporate bonds or anything you can find in public markets. And there's all of a sudden in our world a ton of new money that's been printed and very low interest rates. And so the prospect that you can get double-digit yield from a place with relatively low risk is really attractive. I think the challenge is just having the institutional kind of checking the boxes of, oh, are you regulated? Do you have a fund admin? How do you just explaining to people the mechanics of how DeFi works, or keeping track of it to show people, here's what's happened to your money every step along the way. Again, people just want to make sure, they don't lose their jobs. And so that's a process. And luckily we have all those boxes checked, and it's just a matter of time to kind of work through that process with people.
That's awesome. What type of individuals, or if you want to say institutional investors, are using or participating in your fund?
Yeah, so one is like,
you probably can't give names, but if you can, maybe as far as category, like family offices, things like that.
Yeah, so there's, I'd say, 4 categories. One is just high net worth individuals like myself or my partner, that we understand crypto, understand that it's a thing that's not going to disappear, and that it makes sense to have it as, a portion of a portfolio. If you just look at the kind of historical returns or risk reward of owning Bitcoin by itself, it makes pretty much any portfolio look better over the last 10 years. And so there's a category of those people, but that are professionals or understand tech, but they're not going to sit in front of a screen and trade and worry about this every day. They just want someone that they can trust to take care of it. So that's one bucket. Another is like small to medium-sized RIAs that have, are under pressure because their, clients are saying, hey, everyone else is in Bitcoin. How come you don't have something to offer me for Bitcoin? And so offering a product for them where they can put their clients into something that's professionally managed, but also isn't going to have as much risk as just owning some random cryptocurrency is another bucket. As you mentioned, family offices, which is, just another form of basically a small institution, but groups that, again, understand crypto, understand it's here to stay, and are able to make more autonomous decisions or relatively quick decisions is another. And then the fourth is, surprisingly, some venture capital funds we've had who just have money kind of sitting, waiting to be deployed. And they're saying, hey, if you can insure me, I'm not going to, lose all my money if Bitcoin drops because you're managing the risk. Or if you can put me into a yield fund, that's really attractive to me to make some extra money while I'm waiting to invest in startups or other kinds of companies. We've spoken to a number actually of central banks of some governments, some other Latin American governments that people aren't quite talking about yet. And I'm talking to a number of sovereign wealth funds, but it's just a different mindset, and they move very slowly. And so they're ongoing conversations, but don't have them as investors quite yet.
That's exciting, though, to hear that they're at least having the conversation, the discussions happening at the table. And to your point, maybe they're slow moving, but it's interesting to see all of these different folks now looking at crypto and looking at investing in it.
Yeah, it's just fun. I think there's such a sort of bipolar thinking around it, where some people just see it as this speculative kind of get rich quick scheme, and then you have these diehard people that see it as the only safe possible place to put your money in the world in these conditions. And I think there's a third approach where you just look at what it's done historically. There's enough track record, at least on Bitcoin, that you can say, hey, this thing seems to have some patterns that I can incorporate into a portfolio. And so it just kind of makes sense from a like kind of asset management perspective, but there's such a variance of psychology of what Bitcoin is or how it makes sense as an investment. Is it a gamble? Is it the opposite of a gamble? Is it inflation protection? And I think there's still various narratives cohering around those things.
So you spoke a bit about some of the strategies, I guess you would call it, or tactics of how you've been able to have success and grow the fund and so forth. Given the current market pullback, are there any insights or strategies that you can share that you guys have been doing?
So I guess there's a couple things. One is, on the most surface level, what we do isn't extremely complicated in terms of the goal. The goal is we want to provide protection by puts effectively. I'm not sure how familiar you are with options language, but buy puts or put protection so that we're not as exposed to the downside as you would just owning Bitcoin or Ether outright. But at the same time, we don't want to miss the upside of Bitcoin and Ether. And so what's difficult is not to buy protection or have protection, but because the volatility of Bitcoin and Ether are very high, the expense of buying that protection, of buying options, is very high. And so you could end up spending 20% of your whole portfolio a month just protecting against something moving downwards, which may never move downwards that month. And so the real challenge is making good decisions around, okay, when does it make sense to buy puts? How do we buy them? Can we sell calls to finance those puts in an effective way so that we're not wasting all the money of the fund just buying protection? And so making the good decisions around when we're in high risk volatility environments in both the micro and macro scales, like in the last 2 days, we've gone up, 6 standard deviations, much more than the average, is a good indicator things are going to fall back down. And so even though Bitcoin and ETH seem to behave unlike any other asset, our backgrounds and our CIO's background is in trading public market volatility. So things like derivatives of the VIX, like UVXY or VXX, but highly volatile public market financial instruments. And so the same kind of statistics generally apply to Bitcoin and Ether, that, if things go up crazy amount, they're going to come back down. And the same behaviors are somewhat consistent, and you can find statistics around that stuff. What's a bit different is that it tends to move more on an exponential scale rather than a linear scale. And there's, over the long term, not as much mean reversion as you would find in something like the VIX, which is because there's a finite supply of it and not an infinite supply. And so as you get more and more people interested in it, the price goes up. But so it's generally what we're trying to do is blending these, traditional market back statistical, measures of trading volatility, and then incorporating some crypto specific ones, and, other things like movements of crypto on and off exchange, major whale activity, the death cross, or, things like that. And then the other thing that, we do at our fund is just look at the nature of volatility. So like the derivative, the volatility of volatility, are things getting more volatile over time, or are they getting less volatile over time? And so we kind of understand that as these different sort of regimes or different kind of phases of how Bitcoin and Ether behave. And we can say, oh, we're in a high volatility, increasing volatility behavior right now. That tends to coincide with these kind of market moves. Or we're in a low volatility, decreasing behavior right now, and that has different market characteristics. And we can make pretty good decisions around how to trade based upon some of those statistics as well.
I have to ask, and I know sometimes these things are under NDA and ready for PR releases and so forth, but any hints as to what we can expect from 2 Prime sometime this year or later this year?
There's nothing incredibly secret or anything like that. We just have we just released this second product, and I think the rest of it will just be making those things better, growing them more. Increasingly, we're looking into the DeFi side of things to find better yield, as like the spot versus future markets, the spread has tightened significantly. And so I think a lot of people are looking for better ways to find yield. We're already doing some of that. But no, at our fund, we're not doing press releases every week and having crazy announcements. It's just doing the couple things we do consistently and well. And, again, our investors aren't looking to get rich next month. They're looking for an investment for the next 5, 10, 20 years. And so for us, it's just about consistency, doing what we're saying we're going to do, and not really rocking the boat too much.
Sure. Quick question on Bitcoin ETF. Everyone is kind of in anticipation of the SEC approving one or more this year. What does your gut tell you? Given we've seen a lot of movements from some big players throwing their hat in the ring, like Cathie Woods and so forth. Do you think we will get one or two approved this year? And would you guys participate in any way with any of the Bitcoin ETFs?
Yeah, so I'd say first off, I don't know. I do know that Grayscale and some others are hiring ETF specific job roles. And I know that they have ongoing conversations with the government. And so it surmises to think that, they're not just hiring people randomly, that they have some good sense that they're going to need those jobs for a reason.
Sure.
But that, whether that's this year or next year, I think just on a political perspective, you've just added this is the first year of a new presidential administration and a new SEC. And so is a Bitcoin ETF and all the kind of regulation around that at the top of their agenda the first year of the administration? Though in the Bitcoin world, it seems like all that exists is Bitcoin. I'm not sure that really is top priority for those people. That being said, there's other countries like Canada, as we know, and several European countries that are introducing Bitcoin ETFs and Ether ETFs. And so there is, I think, increasingly some pressure from the SEC to offer or allow American companies to innovate and compete in that marketplace. And so I couldn't tell you when it's going to happen, but I would be shocked if it wasn't by the end of next year, and pleasantly surprised if it was this year. I know that I believe the Van Eck ETF is due for some kind of decision to be made pretty soon, though. They always just keep extending these things out. Would we directly participate in anything? No, not really. I mean, an ETF is just a public way. I mean, the real benefit of ETF is that a lot of public market traders or large investment firms can invest in a product that's regulated up to their investment mandates. We're a private fund, and so we're not really limited or constricted in that way. And so just having a wrapper around a regular Bitcoin, it just adds complication for us. And so, I think we benefit from the rise in price that an ETF would initiate, but we wouldn't directly buy or sell one.
Got it. So speaking of price, obviously we've had a correction. Do you feel we are still in a bull market? Some are saying we might double peak Bitcoin might double peak like it did in 2013. What are your thoughts on what's currently happening?
Yeah. So, well, again, we just look at statistics and mostly are reacting to the market. We're not trying to make predictions. We're just always trying to maintain protection and capture some of the upside when we can. So on a fund perspective, we don't know. We can just analyze the numbers. I can tell you, if you look at like the options market, the market is betting on a Q3 and Q4 secondary rally of the price, is where the skew of options, people are buying calls that are, above the current price, suggesting they think the price is going to go up. And that's where the majority of calls are placed currently. And so, I think that's a positive thing. If you look at futures markets, the spread on like 1 month futures is very low, negative or very close to zero right now, which means in the short term, people are guessing it's not going up this month. And 3, 6, or year-long spreads, there's slight contango, or the future is higher than the current spot price. But it's a couple months ago the futures were trading at 25, 30, 35% above spot, and now it's more in like the single digits. And so there's a more muted kind of futures buying behavior in the market as a whole. But if you see a rally, that all that stuff changes in an hour, and so it also can be kind of a not that useful of a thing to look at. From a personal or kind of more fundamental look at it, I know that there are a number of large financial institutions that are making moves into the space. We also, everybody knows there's countries that are starting to make moves into the space. There are a number of additional technical rails for like medium and small size banks to allow people to buy Bitcoin directly through their bank accounts. Things like that NYDIG are working on, for example. And so I think there's still a lot of strong and fundamental changes that are opening up the world economy to be able to buy and trade Bitcoin and Ether, as well as, at some point a Bitcoin ETF will hit the North American, or rather US market. And so I personally think that I think we're at the low, or, the 30, 32 is held pretty strong here for a while, and we'll see a divergence upward at this point. But I could also be wrong. It'll either go up or down, though, for sure.
Let's say we have that another bull run up, another peak. Do you have a Bitcoin price prediction?
No, I don't. I think there's a lot of people that bought Bitcoin between 32,000 and its previous peak around I think it was 64 or so, and so that's a lot of people that a lot of people wait, like retail buyers wait. They get to I bought at 50,000, and then they're like, shit, I'm down a bunch. It gets back to 50,000, they just want out. It's been too painful, and so you have a lot of buying behavior. You have to kind of chop through all these basically ceilings. All these people that want to get out at these various prices, and then around that 62, 64 price, when the Coinbase IPO is happening, there's a lot of trading activity, which means you might have a lot of resistance there. So yeah, I don't know. I don't think anybody can tell you for sure, but yeah, I guess we'll see.
For sure. I want to get your thoughts on what's happening with Bitcoin mining. We saw China. I don't know if it's a ban or whatever it may be, but look, the miners are leaving China and they're going to Kazakhstan. Some are coming to the United States. Some are saying this is good because it breaks up the mining pool that was in China. It decentralizes the mining. And it's good to see that the US is getting some of that respective hash rate. What are your thoughts on the whole situation? And look, it's been something that's been considered FUD, but it seems, from my opinion, from my perspective, it seems like a good thing long term.
Yeah. So, I mean, it's not, I don't think it's FUD, right? Like if you have basically the producers of Bitcoin, a major block of them are out of business, or at least severely inconvenienced in what they can do, and need to move expensive equipment and change up operations and move to other countries, register businesses in new countries, find partnerships in new countries. It's not an inconsequential thing. It'd be like, I have a gold mining operation in California, and then suddenly I have to move it to Kazakhstan just because there's gold there. It's not like, that's not just like a minor, no pun intended, minor problem. So I think that, there's like, that's a big disruption, because it's not just like there's miners that aren't making money. Those miners are whole economies in themselves. They're trading Bitcoin, they're making other investments. They feed a lot of other investment firms, because that's who they're doing transactions with. They're on exchanges. And so it kind of flows, or it's almost, I don't know, I guess trickle down or trickle up, but it flows into the whole ecosystem as a whole. That being said, I think that a lot of the miners in Asia are very wealthy. And so, they're going to do whatever it takes to keep making money if they're at a significant enough scale. And it's, a lot of people don't like Taleb in the Bitcoin world, the writer, but this is kind of an anti-fragile moment where, everyone said, Bitcoin, China's going to shut it down and then the whole thing's over, but that's no longer a significant risk to the Bitcoin network. Those that do survive, miners that move out of China, well, they're pretty robust, strong businesses that are now even stronger, that aren't restricted to a current jurisdiction or some kind of sudden regulatory move. Additionally, there's, competition amongst countries to find new sources of revenue. And so, it may not be of interest to China and maybe some other jurisdictions, but second and third tier economies that want new businesses, want new tax money, want new ideas, or you want people to rent spaces and pay for electricity. There's always going to be others that are going to be interested in that. And so people will find places to make money if there's profit in it. And then, on the US side, I think, has increased the portion of, the mining hash rate in the United States, and is, going to temporarily make mining, the per terawatt or per kilowatt, mining more profitable, because the difficulty and competition is slightly lower for the time being. And, I think in the long term, medium term, long term, things will recover and become even stronger than it was before. But it's definitely not like an easy path for a lot of those miners.
Sure. And along the lines of mining, Elon Musk, obviously a couple of months ago, or maybe not a couple of months ago, but he came out and said, Tesla, we're going to halt Bitcoin payments until and then he followed up by saying they will allow payments again once the mining hits 50% renewable energy. What are your thoughts on Elon and all his tweets and shenanigans and memes and all of that, and his stance on what's happening?
Yeah. So, I think a number of things. One is, it's not like electricity and energy isn't bad. What's bad, for most of us who believe in global warming and the earth getting hotter every single year, is the proliferation of fossil fuels or carbon emission into the environment. And so there's no problem. Like, the human progress is directly correlated to the amount of energy that we produce. And so the problem isn't that Bitcoin uses energy. The problem is that some of it comes from non-sustainable sources. I think generally, Bitcoin, the main expense to miners is their, fixed cost of electricity, and renewable energies just happen to have lower fixed costs. And so there's an incentive to find cheaper sources of energy, or even innovate around some of that. Like, there's another Denver company, Crusoe Energy, that helps people, oil miners, instead of doing natural gas flaring, convert that into energy and mine Bitcoin with it. And so that being said, I think that people in the crypto world want to be like, oh, this is complete bullshit. Like, all Bitcoin can ever do is save the world. And the reality is it uses up a lot of energy. I guess it's a question of what you think Bitcoin is, kind of going back to that, bipolar perception of Bitcoin either being really valuable and important or just a speculative asset. If it's becoming the global reserve currency, then if you compare it to the energy costs of what the US dollar takes to keep an operation and all the oil and petrodollar implications of that, Bitcoin is a tiny, tiny fraction of the energy expenditure. If you compare it to just some kind of speculative thing, then it seems like a crazy waste of energy. And so I think some of it is a perception issue around the importance or significance of what Bitcoin is, and what energy expenditure is reasonable. I think another just funny thing is, like, I don't own a Tesla, I own a Porsche, but it's an electric car, electric Porsche. And it's electric, but like, where do you think the electricity comes from for Teslas? It's just oil and gas and coal being converted into electricity and put into a car. And so, I don't think that 50% of the electricity that's powering Teslas is from sustainable sources either. But, there's societal and cultural acceptance of the value of electric cars and, electric vehicles and Tesla as a whole. But in reality, it's pretty much the same problem and the same sources. I think other than that, I think, I don't know what goes on behind the scenes at Tesla, and I don't know Elon Musk, but I have a feeling it wasn't just his own decision, or, to be a renewable energy company, and you're probably received a lot of pressure around doing some kind of stance or reform around the value of Bitcoin. The last point I would make is just that, it really speaks to the nascency of the Bitcoin, economic system as a whole, that there's, one billionaire with some opinions that can really affect the price and perception of the whole industry, and, tens, if not hundreds of thousands of jobs in general. That being said, if you look at just the statistics of what was happening to the price of Bitcoin and buying behavior leading up to a tweet that moved the price down, if it wasn't going to be that tweet, something else was going to return the price of Bitcoin downwards, because it was just so overbought. And so I think it's also a question of what we attribute cause and effect to in market dynamics as well.
Yeah, to your point, like, and some people were saying we kind of overshot a little bit. Looking at previous market cycles, the run up was just so strong, and it was due for a correction for sure. Um, as far as U.S. crypto regulations, and I don't know what you, it's kind of along the lines of the Bitcoin ETF. It seems like Congress and there's different lobbying happening and a need for more regulations. And this under the SEC, there's the Bitcoin ETF approval, and there's also they're handing out lawsuits, and specifically one to Ripple over XRP, which a lot of people are looking at. What are your thoughts on the whole situation? There's a lot of things on the SEC's plate. It seems like Congress is moving in the direction of proper crypto regulations, and I'm not sure if you have any thoughts or of anything happening that you can share.
Yeah, so I think generally, regulation is like, it's funny just to observe a digital asset that's whole kind of existence was based upon not being subject to government decisions and centralized financial systems, then coincide with the regulator, who's basically the referee of the centralized financial system, trying to wrap their heads around it. I would say that they have a really difficult task. It's just like trying to shut off the internet. It's not, there's no flip switch for Bitcoin. I mean, the biggest flip switch was probably China being able to shut down miners, and that, it's not sufficient. So I think it's a really difficult task, and just at some level, an irreconcilable mismatch of goals and values. That being said, I think that for mainstream adoption, most of the money isn't individuals speculating and trading stocks in Bitcoin. Most of the money is massive institutions with massive regulation, that are basically extensions of the government. And they can't, even if they think Bitcoin is the best investment and they would be crazy not to do it, if it's not regulated in a way that's going to pass muster at these large institutions, they're not gonna be able to do anything. And so, regulation has to happen for adoption to occur. And it's, really an amazing thing that Bitcoin's gotten to the point where it's annoying enough to people that it needs to be regulated. There's so many things that aren't regulated that are problems because nobody cares about them enough. They're not big enough problems for the government to take notice. For us, we trade only Bitcoin and Ether. They're regulated as commodities in the United States. And so it's pretty straightforward regulation. I'm not worried the US is going to make Bitcoin illegal tomorrow. I think that's well past at this point. On terms of the Ripple side, that comes down to securities law regulation. And I think that's really difficult. Again, you've created something that can be scaled and distributed and sold without any kind of filing with the SEC, and there's just a technological possibility to do that. And the technology goes way faster than any regulation or rule, and the regulator looks back and goes, "Oh, that wasn't allowed, and you shouldn't have done that." But they never tell you in advance.
Right.
And so it puts companies and entrepreneurs in a really difficult position because you're always worried you're in trouble, but you'll never find out till after you do the thing wrong. I think in the case of Ripple, I can't speak to the specifics of the ruling or the current kind of dispute amongst things, but I'd say that it does seem like the rules have been unfairly applied to different places, and it's just a difficult position. I think also the Ripple's just been selling tokens into the market. I mean, that's their business, is they sell tokens and profit from it. I don't think they're doing a lot of good for many people other than the owners of Ripple. And so I think it's, the SEC also is trying to protect. I mean, the SEC is fucked up. The rules around how they try to protect people are anachronistic rules from a time before technology where it was today. It's like the accredited investor rule. It says if they have $1 million net worth or income of $200,000 over the last 2 years. It's a very gross tool to try to decide who is financially sophisticated and who wasn't, at a time when tech and sophistication were very different than they are today. And so you end up having basically the best investments, the most successful ways to get yourself out of poverty or middle income, middle class living are barred from you. And so that seems incredibly unfair. You have technology, software developers who are building these protocols that are so much more sophisticated than most of the investors that have the money to buy these things, yet they're barred from owning or trading the thing. That seems completely absurd. But And so I think you have this, I don't think the SEC is out to like screw people, but I think that they're a large institution trying to keep up with innovation that is well past what they can do. The last thing I'd just say about regulation, similar to what I was saying about mining, is there's also competition across different jurisdictions. And so there's, regulatory arbitrage where you have places like Luxembourg or Malta or the Isle of Man or Kazakhstan or whatever that they're ready to take some risks. They're ready to open things up because they want to grow their economies and they don't have as much to lose as a tier one economy like the United States. And that's kind of the history of time, is you have like incumbent businesses, incumbent leaders, even incumbent rulers of, tribes. And then the upstarts and the innovators are willing to take risk, figure new things out. And they at some point usurp or at least threaten and force the incumbents to change their behavior. And the same thing happens with regulation. And so, the US will have to adopt and overcome things or be left behind. And increasingly, as Bitcoin and crypto world becomes the financial rails of the whole world economy, it just can become increasingly significant for them to figure it out.
Sure. A couple more questions and we'll wrap it up. I want to get your thoughts on NFTs and if, at 2 Prime, eventually you guys might look into that part of it, if it makes sense for your fund. But what are your thoughts on the rise of NFTs?
Yeah, so I have, I guess, a couple thoughts on it. One is I would just say like my bias is like I've never been really like a collector of baseball cards or action figures or Pokemon or anything like that. And so I think for whatever reason, my personality isn't that predisposed to like collecting stuff in that way. And so an NFT digital version of a collectible, even less so. That being said, I think also when we talk about NFTs, there's people are talking about different things sometimes. Some people are just talking about pictures, right? Like pictures or visual graphics that they're using are tracked as digital unique identifier. But there are other, really, like Walmart, for example, has tracked individual pieces of lettuce through a supply chain so that if there's a salmonella outbreak or E. coli, they can say, oh, it came from this farm. They don't have to recall all the lettuce in the whole world. They can be a little bit more efficient. To me, that falls under the NFT technology bucket, but I don't think those people are talking about that. And so I think the ability to use a immutable ledger to track items, unique items through a supply chain or through some kind of financial ecosystem, whatever, I think is tremendously valuable. I think though, the easiest places to introduce NFTs are in culture because it's not regulated to sell a piece of art. It is heavily regulated to track food products through a supply chain. And so, the barriers to entry to selling your art and making some money are much lower. And so that's where we see things happening first, or that's where we see the kind of outside success. And then anytime there's a place to make money and make it quickly and there's some mania, you're going to see legitimate actors and you're going to see corrupt ones, and you're going to just see every kind of people entered into that space and try to, play their role in it. And I think just like we saw with, the ICO, I friend of somebody I really respect said, NFTs are just ICOs with pictures. I think that's a simplification, but in the ICO trend, generally that's kind of a nasty word now, an ICO, but there was a lot of great companies that still are around today that came from that, and most of them withered and died away. And that's just the nature of business innovation. I think though, where you run into issue is when you have individuals with very little kind of familiarity or in states of financial desperation that are trying to get in on this and losing, money and being taken advantage of. And I don't know though, like you can't protect everybody from everything. Like what's the opposite? You just don't have NFTs or innovation, and then we never, move forward. And so I don't know what the right way to treat or regulate that is, but it's going to be imperfect, whatever it is. And so other than that, I'd say I'm an investor in a creator economy fund that invests in NFT tokens like Rarible and companies like that. But the reason I'm an investor in that is because I don't really know shit about it directly.
Got it. This is kind of a loaded question, and you could do your best to answer it. But given that obviously you're investing in the crypto market, where do you see cryptocurrencies within 3 years? Do we have mass adoption? People are using it to, or spending it, and more businesses are accepting it, things along those lines?
Yeah, so I guess it's a question of like, what is the goal of digital assets? I prefer that term over cryptocurrencies, like, because I think cryptocurrencies is not the right name, right? Like, I don't think the goal has to be that it replaces the dollar. The dollar is one like very specific financial instrument that doesn't really change in price. And so I can trade goods and services for it because it's not going to have volatility. Volatility isn't good or bad. It's just a feature of something. And so we already have, obviously stable coins and things that can replicate the dollar. And we know that the CBDCs of the world are starting to issue their own digital versions of money. I think there's a lot of risks and scary things around their ability to track and control money even more tightly than they already do as a result of those technologies. But I think more broadly, technologies that can displace, I mean, to me, the most exciting thing is the DeFi world, where you're taking financial manual processes and making them automated and transparent. So I can get a loan, or I can trade derivatives in ways that I couldn't, or it'd be very burdensome and expensive and laden with rent-seeking fees had I done that through a traditional financial intermediary. And it's restricted to just the wealthy that have access to those things to begin with. And so I think those things are going to continue to proliferate and grow. I think the foundation of all this is Bitcoin and Ether, and I think that they have a strong future ahead as well. And along that path, I think there'll be a lot of mistakes and issues. I think I don't know. And it's also, we also see for the first time governments starting to bring Bitcoin into the fray as, legitimate, recognized, in the case of El Salvador, basically a currency, even though, I don't think people really treat it that way. That's interesting. And so I think that, it's not like, I guess, I don't know what the stage would be when like somebody says, okay, the US government is using Bitcoin instead of dollars now. I guess that would be like the ultimate, like mind-blowing, like victory. I don't imagine that happening ever. But I think that a lot is changing, and it's definitely putting pressure on banks, pressure on intermediaries. Like, why would I stick money in a bank for like 0.02% annualized interest when I can earn 18, 20% doing DeFi staking with somewhat near the same level of feeling of protection in terms of the money's not going to disappear, at least in some venues. And so I think that will only continue to both usurp the power of banks and centralized financial institutions, and also put pressure on them to innovate and provide some of these solutions themselves.
Got it. So I want to wrap it up here with some quick rapid fire questions, such as, what's your favorite food?
I just had it last night, sushi for sure.
Awesome. Favorite musician or band?
I'd say probably Glass Animals, if you know who they are.
Yep. Favorite movie?
Children of Men. Have you ever seen that?
No, I don't think I've seen that one.
Oh, you got to see it.
I'll definitely have to check that out. Favorite book?
Probably this book, let's say, well, in terms of, I mostly read nonfiction now, but there's a great fiction book called Never Let Me Go, which is like, it's about the lives of these like people who are clones of humans, and their whole reason to live is to be organ replacements for like the regular human, but it like follows the life of these clones as they like fall in love, and then they like die and have their organs taken out. And it's like incredibly painful and sad story. And then, I've read a lot of different nonfiction books that I have found beneficial as well.
Cool. And when you're not working at 2 Prime, what are you doing for fun as a hobby?
I do a little like trail running. I'm actually running a trail running half marathon this Sunday, and I just hiked in Colorado they have these things called 14ers, but like 14,000 foot peaks or above. So just do some hiking and outdoors stuff and hang out with my girlfriend and dog.
Awesome. Well, Alex, pleasure chatting with you, man. And we'll love to have you back on as things progress at 2 Prime, and maybe open up to other assets, things like that. But thank you for joining us today.
Yeah, pleasure to speak with you. Thanks.